Okay, everyone. Okay, guys, come on in. I want to talk to you guys about an update. Let me go ahead and turn this down because this is very important information. So look, I want to talk to you guys about an update really quick for small business owners. It is in regards to an act that has already been passed through Senate. They still need to pass it throughout or approve it throughout the House. So it's not there yet, but they definitely foresee it being passed, right? A lot of people are asking if it is completely passed, when can we see different changes made? We don't know, guys. It could be, a couple of months. It could be a couple of years. But here's what I tell all my clients. If you stay ready, you don't have to get ready, right? And if you stay ready, you don't have to worry about surprises that could affect you negatively, right? So here's what's going on, okay? The Inflation Reduction Act has been passed by Senate. Okay, what that is it's a bill that they are going to increase. Okay, it's going to be $80 billion that they are going to give to the government and allocate to the IRS to hire almost 80,000 agents and auditors. Okay, so that's number one. Okay, so and then let's keep this in mind, guys. They wanted to double how many auditors they had last year. They didn't get anywhere near the amount that they actually wanted to hire, okay? However, this might be a different scenario if they're going to invest $80 billion into that, which means higher pay, which means more people can actually be hired to do the auditing and the agent job, especially if we're going through a recession. That money may sound good to a lot of people. So again, let's just keep it, let's make sure that we're ready to make some changes, okay? So you'll see me looking in different directions because I'm on several different platforms. Here's what I want to let you know. They are going to be focusing on small businesses. It is super important that you guys understand that. What they're going to be focusing on is small businesses that earn less than $200,000 a year. Okay. And the reason being is because in their mind, that's not really the big boys yet. Right. And so in their mind, the paperwork that you need, your files are not really going to be. Thank you so much for joining. Your files are really not going to be in together. So they really foresee being able to look at a file for a small business earning less than $200,000 and saying, okay, well, this is not in order. This is not in order. This is not in order. You guys are an easy target. All right. So here's what I want to go over. It's a couple of different things. Even in previous years, understand that audits are random. Okay. So it doesn't mean that you did anything wrong. That doesn't mean any of that. But now that they're going to be targeting small business that earn less than $200,000, that means that you have a higher chance of being audited. And if you have a higher chance of being audited, that also means that you have a higher chance of them finding something that should not be there, which means that you have a higher chance of owing back money that you either received or not getting certain credits. So all of my clients, they know that I believe in education. I don't just do your taxes. I want you to be aware during the year what you should and should not be doing. So it makes it easier for you at the end of the year when you file, especially my small business clients or even large corporations. It's going to be super important that you guys implement these things if you haven't already done so. Number one, you want to definitely make sure you get a business bank account. You guys hear me talking about no commingling all the time. Please make sure that you get a business bank account. Stop running personal things through your personal account and stop running personal things through your business account and business things through your personal account. That is going to absolutely hurt you. Stop commingling. Okay, so let's get that in order. Also, bookkeeping is going to be very important that you do. If you're just joining, we're talking about the Inflation Reduction Act that has already been passed from Senate that is allocating $80 billion to IRS auditors and agents for them to increase to almost 80,000 of new hires, okay? Which means that they are going to target Small businesses, they've already put this out. Small businesses making less than $200,000. To them, you guys are not really the big boys yet, and so they foresee you guys probably not crossing all your T's and dotting all your I's. So you will be a target. And so I want to give you guys some information, some tidbits, some tips on how to keep it together in case you are audited. Okay, so number one, again, no commingling. What is commingling? Stop running personal stuff through your business account and business stuff through your personal account. Please make sure that you do have a business account. Okay, number two, make sure you have either paid somebody for bookkeeping, okay? Or if you don't want to pay a company for bookkeeping, make sure you have some sort of app that is going to do that. Here's the problem. When you rely on these apps, remember, you as the person have to control these apps. So if you're not putting these things in the right categories, guess what? The app is going to put it in the wrong category. And when you hand it over to your tax professional, if something is not correct, that's going to be a red flag. And then on top of that, what you also need to consider is most of the time your tax professional, if they go through what you hand them from these apps, QuickBooks, and it's not done correctly, they're going to charge you a bookkeeping fee anyway. So you might as well just pay the correct amount with whomever is going to do your taxes. That way they have everything and you are easy peasy when you go through your tax season. There's no anxiety. They already have everything that they need. And any questions that they had, they would have been asking you all throughout the year. So that's number two. Okay, make sure you have some sort of bookkeeping in place. Number three, super important, stop paying people through Venmo and Zelle. Stop paying people through Venmo and Zelle. We're actually seeing the problems with that this year with so many different audits. And because you're paying through Venmo or Zelle, they now have a right to, hi mom, thank you for joining. They now have a right to look into your personal finances, right? And what do we always teach you? What do I always teach you? If they look into your personal finances and they see one thing that's commingling, now they have the right to basically say, hey, we're not going to give you these deductions because we can't tell what's personal or business. So it's super important that you guys stop paying people with Venmo or Zelle. Absolutely stop doing that. Please understand what the IRS is. The IRS is a collection agency for the government. Okay, they are not your friends. They may be nice. They may want to work with you. You definitely don't want to combat them. You want to have, great conversations with them, but understand who they are so that you understand what the purpose of, and then you know how to handle it, right? Okay, so if they are the collection agency for the IRS, their job is to collect money. Their job is to find problems in your tax file to say, no, we're not going to give you this, and now collect that money. It's super important that you guys understand that. Also, before you have somebody do your taxes, look at the categories. Make sure that the categories make sense, okay? There should not be, and that's what I'm talking about, Schedule C's. Now, also understand this, guys. If you have a Schedule C, you're already on a higher radar than somebody who is filing 1120 or, those corporation taxes. You're on a higher radar for a Schedule C because everything is itemized. And so when everything is itemized instead of grouped together, then they have a better chance of looking through something and saying this does not make sense, right? So again, please make sure if you're filing a Schedule C, who would file a Schedule C? A sole proprietor, an LLC. All of those people who file Schedule C's, make sure that you look at the categories and make sure it should be simple marketing. It should be, thanks mom. So it should be marketing. It should be advertising. It should be coaching and education. It should not be school clothes for the kids. It should not be, hair and makeup. It should not be, you have to pay attention to what is itemized and what is categorized. And if you look at it and say, okay, think as an IRS person, like why would hair and makeup be on something unless you're selling that, unless that's your business? And that should actually be your product, right? So that's not really hair and makeup, right? School clothes for the kids, school tuition, all those things, debt that I had to pay. all those things don't make sense, right? So if you, I'll probably do a teaching and we'll go over some of those things, but some of the things that you should see should be, again, advertising, marketing, vehicle expenses, subscriptions, anything that is dealing with your business, yes, but make sure you don't have 80 different lines. You want, the more it's grouped together, the better. Okay, and here's the last tip, which is going to be very important. Once you get through that part, and I know you guys do not want to do this, but it's super, super important this year. Again, guys, if they are increasing to 80,000 people and their target focus is going to be on small businesses that make less than 200,000, I really suggest that you do this step. It is going to be very important. Some of us don't want to keep, so somebody on my Facebook channel, please make sure you type in if you guys can still hear me, because I had a call coming through and sometimes it makes it go mute. So what I was saying is, please make sure you do this step, because if you don't, there's going to be a lot of problems. It's going to open up a whole can of worms that you do not want to open up. Make sure you're keeping your receipts. I know that a lot of you don't want a purse full of receipts. You don't want to go the old method and having this, shoebox with receipts, but please make sure you take this extra step and you get receipts. And not only that, but make sure on the back of the receipts, you are putting who, what, and why. The where will be on the front of the receipt. The date will be on the front of the receipt. So you don't want to do that. So here's an example. If I go to lunch with Stone Cold Grind, Wendy Lovejoy, ALNA Accounting, if I go to lunch with any of those people, and let's say we're discussing Airbnb, because my family has a lot of Airbnbs, okay? So let's say we're discussing the Airbnb that we're putting together in Orlando, okay? So we all come together, we have a lunch. Listen, we have expensive taste, so we're going to go to Capital Grille, okay? And Capital Grille is expensive, right? And that's not a problem. Nobody's saying that you have to go to, Chick-fil-A. That's not the case. But if I'm going to go to Capital Grille and the bill between all four of us is going to be $500 or $600, better believe that that's going to stick out like a sore thumb, and that's not a problem, because when they ask me for that receipt, I'm going to say, nope, I was with Wendy, I was with ALNA Accounting, I was with Stone Cold Grind, and we talked about this, about the Airbnb, so who I was with, what we were talking about, and why did we get together? Because we're thinking about going in partnership to getting it done. So that is something that they would say, oh, okay, well, her ducks are in a row, her T's are crossed, her I's are dotted. So this is going to be an expense that, we're going to go ahead and let her have, even though it's a high expense, right? But if I didn't have that, who's going to remember what you talked about, who you went to lunch with, if I just see a Capital Grille receipt, or if it's just in my QuickBooks Capital Grille and I write nothing there. If you don't want to keep a bunch of receipts, keep a grinder. A binder or a journal, right? You want to have that there so that you can jot these things in, and it's already there for when you need to think back, okay, 8 months ago, this is what we talked about. If you're not doing stuff like that or taking the extra mile, again, that could be something to where they say, hey, we're not going to give you this deduction. And you might say, hey, $600 is not that much. But what if that $600 was the threshold to getting you to a lower tax bracket and saving you $10,000? That $600 then matters, right? So again, guys, it's very, very important. If you guys stay ready all year, no matter how long it takes, if they pass this bill completely, it gets through House, okay? And if they start doing things immediately, you guys are already ready. You don't have any surprises. There's no anxiety. And remember, I teach you guys all the time that your tax return can be the stepping stone to wealth. It can be the stepping stone. $600 stopping you from getting, a $5,000 check or not even owing $10,000. If I don't owe the government $10,000 and I've been planning for that, that doesn't mean that the government is going to give me $10,000. That means that I now have $10,000 in my account that I've been saving towards, or if I've been paying quarterly, then yes, they're going to give that back to me. That is where a refund comes from. I gave too much and now they owe me. We sat at the table during tax season, we squared up, they owe me now, right? So if I now have that $10,000, especially my W-2 earners, who maybe are living paycheck to paycheck to paycheck to paycheck, right? If you're now having a $10,000 check all at one time, now there's your down payment for that investment property. Now there's your down payment for that business vehicle. Now there's your $10,000 together to start that business that you want to start. That money that you have grouped together and allowed the IRS to save for you, or the government to save for you because you did the right things during the year and you get that back, can be a way for you to start creating wealth for your family. So it matters. You have to reverse engineer where you want to be and then take it all the way back to the starting point. And the starting point is going to be your business, yes, but it makes no sense to actually make all of this money and then overpay the government. That doesn't make any sense. If you're not supposed to pay them $10,000, don't let lack of proof be the reason that you're paying extra. Don't let laziness because you don't want to write in a journal be the reason why you are paying an additional $10,000 that you didn't have to pay, right? Don't let those things be the reason, because it's not worth it. Okay, so guys, thank you so much for joining. If you feel like this was helpful, please throw a 1 in the chat. Make sure that you are visiting and don't just listen to these things. Please implement it, because we have less than 5 months before it's tax season. Okay. And so again, we already see which way they're going. Make sure you're putting yourself in the right position so that you guys, thank you so much, Stone Cold. Anytime. If this is going to help anyone, please make sure that you are tagging people. And again, we don't know when this stuff is going to start, even if it does go through House. Could be a couple of months, could be years. But I do the time and I do the extra courses and I do the research so that you guys don't have to. My mother is a real estate coach. She does all of the research so that I or her clients don't have to. That is what you pay into, right? You guys have to focus on your businesses and your families, and you guys didn't wake up and say, hey, I want to be doing taxes today. So if you tap in correctly, you don't have to do that. So make sure you hit the notification. Make sure you tag 3 people. You guys have a great day. Bye.